Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two strong buy credit card stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two major players in the credit card industry. Now this industry has often been described as durable and even recession resistant and has attracted investors with its low volatility and steady dividend payments. So today we're going to take a look at these two stocks, what it is that they do, and how analysts weigh in on the stock's future. Just before we get into that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Also make sure you've downloaded the TipRanks mobile app so you can access all your favorite investment research tools on the go. Links are in the description down below. Now let's get right into our two strong buy credit card stocks. First on the list is Visa. The Visa stock trades under the ticker V and is currently priced just shy of $273 per share. Over the past year, the stock has climbed 17.5% and is up a couple percent in the last few months. They do come in with a beta of 0.87, and that is the stock's volatility in relationship to the overall market. Visa is the world's largest credit card issuer. They boast a market cap of about $546 billion, and as per their 2023 report, there were 4.3 billion Visa-issued cards circulating globally. They have partnerships with over 14,500 financial institutions, and their cards are accepted at over 130 million merchant locations across the globe. They act as a card issuer and payment processor and handled over 283 billion card transactions in 2023 alone. Visa will be sharing their Q2 earnings report here in just a couple of weeks on April 23rd, and this does follow their Q1 back in January, where they came out with an earnings beat. For their second quarter, analysts will be anticipating earnings per share of $2.43, which is a decent increase compared to last year's. Looking at their Q1, earnings came in at $2.41 per share, beating expectations by 7 cents. And as you can see, Visa does have a solid track record of exceeding those expectations. First quarter revenue came in at $8.6 billion, which was an increase of 9% year over year, and they noted that payments volume growth and processed transaction growth were relatively stable and cross-border volume growth remained strong. During Q1, they also had share repurchases and dividends of $4.4 billion. Visa pays out their dividend on a quarterly basis. And their most recent quarterly dividend was 52 cents per share for a dividend yield of 0.69% and a healthy payout ratio at 21.5%. That payment came out on March 1st. Weighing in on the Visa stock with a buy rating just last week, we have a 4-star analyst from TD Cowen. He initiated coverage on the stock, saying that Visa has a durable, high-margin business built on the leading scale of its global payments network within the $45 trillion consumer spend market that retains healthy runway for digital payments penetration. The Visa stock does come in as a strong buy based on 26 current analyst ratings, and that breaks down to 23 buys and 3 holds. Analysts' average price target comes in at about $308, which would imply an upside potential of over 13%. Looking down below at some of our most recent ratings, here we do have our TD Cowen analyst giving the stock an upside of 17.5%. One of our hold ratings is our low-end price target with a downside of over 2%, and our high-end price target comes from Evercore at $335, which would be an upside of 23%. Our second big-name credit card stock is probably not a big surprise. We're going to take a look at MasterCard. They trade under the ticker MA, currently priced at $462 per share. Over the past 1 year, they've grown 24.7% and have climbed 8.3% in the last 3 months. They do have a slightly higher beta than Visa here at 0.98%, so pretty on par with the overall market. MasterCard is definitely one of Visa's top competitors in the credit card issuing and payment processing space. With a market cap of $431 billion, there are approximately 309 million MasterCard branded cards in circulation in the US, about 1/4 of the global total. It is obviously a massive business, and in the last quarter, they showed gross dollar volume of $2.4 trillion. They'll also be sharing their latest earnings report here in a couple of weeks, with theirs coming out on May 1st, and this follows their Q4 earnings report back in January, where we did have an earnings beat. For their first quarter, analysts will be anticipating earnings per share of $3.24, which would be a 44-cent increase compared to last year. This is another company that has a solid track record of outperforming those earnings expectations, and Q4 was no exception when they reported earnings per share of $3.18 versus the $3.08 expected. Revenue for the fourth quarter came in at $6.5 billion, which was an increase of 13%. And for the full year, the company did see cross-border volume growth of 24%. Looking at their full year results, they had adjusted net revenue of $25.1 billion, which also grew 13% year over year. For the full year of 2023, MasterCard repurchased $9 billion worth of shares and paid out $2.2 billion worth of dividends. Their most recent quarterly dividend was 66 cents per share for a dividend yield of 0.51%, and once again, another very healthy payout ratio, right around 20%. The same analyst from TD Cowen also recently weighed in on the MasterCard stock, saying that MasterCard offers an attractive, high-growth, high-margin business poised to deliver outside expansion over the medium to long term, given their leading market position in the robust $45 trillion global consumer payments market. And just yesterday, we also had a 5-star analyst from JP Morgan reiterate their buy rating on the MasterCard stock. They said that they expect the Q1 results for both MasterCard and Visa to be within guidance range and for both to maintain their macro tone, calling for stability. The firm remains positive on both stocks, but maintains a slight preference for MasterCard headed into the Q1 results. With 30 current analyst ratings, the MasterCard stock comes in as a strong buy based on 29 buy ratings and just 1 hold. Analysts' average price target comes in at about $516 per share for an upside potential of 11.63%. Looking at our list down below, our most recent ratings here, we have TD Cowen with an upside of nearly 18% and JP Morgan with an upside of 12.5%. Our low-end price target is this buy rating from Mizuho with an upside of 3.8%. If we scroll down a ways here, you'll see the hold rating from back in January, but it doesn't have a price target with it. And our high-end price target is an upside of 18.76% from Barclays. So that is a quick look at 2 of the major names in the credit card industry, both coming in with a strong buy consensus. But let me know what stock you think has the edge in the comments down below. I always love hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at. So please make sure you always stick to your own investment plan. Thanks so much for watching. Have a great day, and I'll see you back here next time.